Alistair, reading from a Kitco article recently, the author showed that the mean asset allocation for the year 24-25 for affluent investors, that is those with 100K plus invested, gold has increased by 120% to bring it up equal to investor-grade real estate, representing 11% of the investment portfolio. Your thoughts on this, Alistair? Does this surprise you? And do you see this process continuing?
Well, I think it's like any statistics. You have to, if you like, look at the context in which the statistics are produced. These statistics were actually produced by HSBC in a survey of affluent investors who they described as having investable assets of at least $100,000 and up to $2 million. So far, so good. In the West, I think we would be very surprised at this statement. So this is another thing you need to look at. Digging into it, it appears that the investors were surveyed. There were 10,700 odd investors surveyed over 12 jurisdictions, most of which were Asian. Now, we could understand the Asians having a higher propensity to buy gold or gold substitutes than say, us. The only Western countries in this were America, the US, the UK, Mexico, and Australia, believe it or not. Now, we know these countries have got very, very little exposure to gold. The other thing we do know is that the larger investors have very little exposure to gold. If you look at the total value, if you like, of the estimated value of global portfolios, gold exposure is actually less than half of 1%. So how do we get this situation where, investors having $100,000 to $2 million of investable assets, allocating something like 11% of those assets into gold? Well, the answer is there's a very high weighting, if you like, of Chinese, Indian, I suppose Indonesian, Hong Kong is another one, and Singapore. So, we've got the Asian influence. And I think the lesson we get from this is that the Asians actually are considerably further ahead of us in their appreciation of what's happening to fiat currencies than we are. They are leading the charge into precious metals. We know this because gold has been migrating from west to east for the last 20 odd years that we know of, and probably longer. So this, in a sense, shouldn't surprise us, but it confirms what we suspect, and that is the future of the relationship between gold and fiat currencies is being set in Asia, not by us. So it's an interesting statistic.
Yeah, well, it's interesting also what you made reference to the man in the street not having, in this country for sure, not having any real understanding about gold. And it reminds me, just last night I was watching Channel 7. I thought, here's an opportunity. So a couple of so-called experts were going to talk about what to invest in and what to look forward to in the new financial year. And they only spoke for about 3 minutes, which was a bit disappointing, but the full thrust was on shares, and they highlighted a few that had done really well over the past 12 months. And then he said, the so-called expert, look, and I think commodities I think they'll have a place in there this year as well. And gold, I think gold might go up a little bit. That was his comment. I mean, you feel like strangling the man and saying, do you know how gold performed last year and what the real expectation is this year? But until mainstream media tells the truth, Alistair, we've got a problem, haven't we? We're just not getting it out to the man in the street.
No, we certainly have. There is very little understanding. And from the few people I talked to in the London bullion market, they render their profits in sterling or dollars or whatever their base currency is. And so they look at gold, if you like, as a trading counter to produce profits in those currencies. They do not understand that it's their currencies which are sinking rather than gold rising.
Yeah.
And this is something which will dawn on them, but it'll dawn on them probably a little late in the game. And I think it probably dawn on them when suddenly they find there's no liquidity in the market whatsoever, and they've got paper obligations, which unfortunately will end up being converted or attempting to be converted into physical obligations. So on that basis, I think we can see that, yes, there's a long way to go in the destruction of fiat currencies and their reflection in the exchange rate between those fiat currencies and gold.